Hey guys, how's it going? I want to do another video on the dollar index, about bonds, etc. It's my second time doing this. Hopefully, I get this into a better video than the last one that I did. But anyways, let's look at the TLT. I don't know if you guys remember this, but it must have been late last year or maybe earlier this year. I was talking about how bonds would rally. No one was talking about how bonds would be rallying. And I was one of the only ones I felt that was talking about, hey, the TLT may be rallying. And the media was saying, no, short bonds, short bonds. Everyone's saying short bonds, short bonds, short bonds. Now, that was a distant memory. Now, flashback to today, where uh, trend followers and the media is saying bonds are rallying, right? Payroll numbers missed. And they were weak, no doubt about that. However, the Federal Reserve is going to be raising rates in the next week. When they do that, then how will the market react? If all the market is on one side of the trade, where they're buying bonds for whatever reason, what will happen, right? The news may come out, we raise rates, and then all of a sudden, everyone unwinds their trade, right? And it feels that it's going to be the case this time around. When the Federal Reserve raised rates the last few times, is actually the opposite. Everybody was selling bonds, selling gold, and then opposite happened after the news came out. So that's just one thing on my mind. And yeah, you could still see bonds rally, even though the TLT is above the Bollinger Band here on the daily chart. Um, you could see this may be telling you that it's overbought, but it still has a little room to the upside, in my opinion. Now, I wanted to look at some other charts as well. I don't want to simply look at one chart. It's the TYX 30-year Treasury yield, and this is comparing the Jeffrey CRB index. And you could extrapolate this for a few years. I just did it for a 6 month uh, lookup. And what I've noticed is every time the RSI hits 70 or hits 30, that may be your indicator to go the opposite direction of where the market's going in terms of bonds, in terms of gold, and in terms of other commodities. And over here, right, March 10th, March 7th, this is the time where the Federal Reserve raised the Fed funds rate. Time to buy gold, right? Trend trade. And April 17th, this was a time where the news came out where, hey, we're going to nuke North Korea, this and that. And then all of a sudden, market shot right back up. Gold sold off, bonds sold off, and whatnot. Now, we don't see an RSI at 30, but if the trend continues where bonds continue to rally, then you may see this ratio go lower, where this may indicate that, hey, you know what? Don't buy bonds, don't buy gold. So I'll be keeping an eye on this in the next week. And if the bonds continue to rally, the trend followers, if they're right, then just be on the lookout for this hitting RSI 30. Once that happens, I think that gold prices will reverse. It doesn't have to be a hard correction, but I do see a correction coming after that. And then I did talk about in a video with John from the J22 report that felt that gold would be resisting at 1300, and I think he was in agreement about that too. Now let's look at the TIP TLT chart, right? Once again, I noticed a similar thing, right? Whenever you see RSI hitting the 20s or the near the 70s, right, you tend to see a trend change. And over here, right, RSI near 70, that's time where people could have made bought gold and made money. Over here, people could have sold gold. And right now, we're at a point of another trend change. And right now, gold and bonds are rallying. So this is maybe indicating if you're buying bonds, just be careful about this, because I just remember 4, 5, 6 months ago, I was not pounding the table. I was saying bonds are going to rally, and they have definitely rallied. And now it's complete opposite sentiment. It's strange how markets work. Everything can change within a blink of an eye. And the last chart I wanted to look at is the EVZ, the Euro Volatility Index. I'm at barchart.com. And by the way, the last three charts were provided courtesy of stockcharts.com. And the Eurozone, right? I told you about the euro currency. 59% of the dollar index consists of the euro. So the euro has a huge role in the dollar index. And right now, the dollar index is 96.67. And my gut feeling is that the dollar is going to rally to its 100-day moving average, at least. And one of my reasonings behind this is the Commitment of Traders report has shown that the commercial hedgers, very smart money, they're 90 some thousand contracts short for the euro. And if they're getting heavily net short, while the speculators are just going into that trade, right? They were talking about parity earlier this year, late December. I don't know if you guys remember that. First, they were talking about parity, and now they're talking about, hey, let's get interested in the eurozone. Let's short the dollar now. Now, I do think that later this year, assuming that we're still in a rate hike environment and assuming that Merkel wins, this will be bearish for the dollar because the euro is going to rally harder. But I'll give you a caveat. Where I see it right now, I expect this trade to unwind that we've seen long euro, long gold, long bonds. It will unwind, and I feel that, not I feel, based on the data that I've been looking at charts, at least the dollar is going to go to the 100-day moving average. Could be wrong on this, but this is just my own analysis, so I'll just give you that. So this EVZ index, right? I put Bollinger Bands on this chart. You could do that. And people that don't know Bollinger Bands, you could see if it's outside of this range, right? It usually goes back in. And same thing with the upper end, right? It goes out and then goes back in. Now, what I've noticed about this chart is if it's at the lower end of the band, you could see a market go down in the euro, or the euro goes down. And you definitely saw that before the French elections. And then Macron won, and then you saw a huge contraction in the Eurozone volatility. And the Eurozone has rallied ever since then. And we're at, what, 1.12 ish? And if bonds rally a little further this week, you could see the Eurozone getting to 113.5, 114, depending on how hard the market corrects, the stock market corrects. And then on top of it, you could see this trend change occur where people were long euro and then they go back to shorting the euro. And we're at the lower end of the Bollinger Bands, right? We're not outside of it, but if the rally continues in the euro, I would just expect this volatility index to go up and eventually, great, it refreshed. But eventually, I'll finish my thought. Eventually, this Eurozone index is going to go back down. So that's just something to note where you have to look at the fact that the Eurozone index is a huge part of the dollar index. And if you start to see a reversal trend because of certain news that comes out, uh, just be careful. Those that are trend followers and traders and whatnot. And this is what I'm looking for, but in the next month or so, I expect the dollar to rally to its 100-day moving average. And yeah, we shall see. Anyways, guys, I'll talk to you later. Let me know what you think, and I'll do another video soon. Thanks. Bye.